All right, let's dive in. Today we're looking at Adani Ports and Special Economic Zone Ltd. Got some interesting documents in front of us.
Yeah, we've got their unaudited financial report. This one covers the quarter and half year ending September 30th, 2024. Also got the auditor's review and even a statement certifying their asset cover. Pretty heavy stuff, but that's what we do here. We'll break it down and make it, well, hopefully a little bit fun, kind of like your financial translators.
I think what's really fascinating here is the timing of all this. I mean, these reports are coming out right as Adani Ports is facing a ton of scrutiny.
Right.
After that short seller report and all the regulatory investigations that followed.
Right. The allegations of financial misconduct that came out last year.
Yeah.
So yeah, that's definitely the backdrop for all of this. For our listeners who might not be totally familiar with them, can you just give us a quick overview of Adani Ports? What do they actually do? Sure. So Adani Ports and Special Economic Zone Ltd., they're an Indian multinational conglomerate. They're huge in port development and operations. Also big in logistics and special economic zones. Really, they're a crucial part of India's whole economic engine.
Okay, so big company, important sector, and yeah, definitely some controversy in the mix. Let's get into the numbers. What kind of financial performance are we seeing?
Well, their revenue from operations for the quarter, that hit 7,067.02 crore. Now, that figure includes a gain of 603.27 crore from selling off a stake in one of their terminal assets. For the half year, their revenue climbed even higher, up to 14,034.34 crore.
Wow, okay, so those are some big numbers. But more than that, I think it's interesting what it says about their strategy. The global shipping industry, it's been slowing down lately, but Adani, they're kind of defying that trend with this revenue jump. Almost makes you wonder if they're grabbing a bigger piece of the pie, maybe because of all their expansion moves.
That's a great point, yeah. Their expansion strategy is definitely something to watch, especially considering all the regulatory heat they're under.
So it's like they're playing offense and defense at the same time, dealing with the fallout from that short seller report, but also going full steam ahead with growth. Got to look at profitability, though, right? That's what investors really care about.
Right, so for the quarter, they're reporting a profit before tax of 2,885.17 crore. And for the half year, that number jumps to 6,477.82 crore.
Impressive, but I remember you mentioned some exceptional items in these figures. So what's the catch? How much are these exceptional items skewing the picture of their actual profitability?
Well, exceptional items, they're those one-off events that can make the numbers look a bit different. It's not always the best reflection of their normal profitability. In Adani's case, these items include things like employee settlements. Oh, and a write-off of a past minimum alternate tax credit, or MAT credit. These adjustments, they definitely played a role in the final profit figures.
Can you unpack those items a little more?
Sure, so the employee settlements, those probably relate to some restructuring they're doing, maybe downsizing, streamlining operations, stuff like that.
Yeah.
The MTI credit write-off, that's a bit more technical. Basically, it means a tax benefit they were expecting, well, if it's not available anymore.
Interesting. So on the surface, the profit numbers look good, but you really have to dig a little deeper, see how these one-off events are impacting their core operations.
Exactly. You always want to understand the real drivers of profitability.
Okay, now for those of us who aren't financial whizzes, what about earnings per share? What does that even mean for investors, and how's Adani's EPS looking?
Earnings per share, or EPS, it's basically how much of the company's profit is allocated to each share of stock. Investors use it to gauge how much they might earn on their investment. For the half year, Adani's EPS came in at 25.73. That's pretty healthy.
Okay, so that's good news for investors, especially considering all the challenges they're facing. But these are unaudited results, right?
That's right. It means the numbers have been reviewed, but not fully audited yet. It's like a preliminary check, not the final stamp of approval. The independent auditors, MSKA and Associates, they did a limited review. That gives moderate assurance about the accuracy of the statements, but it's not the full picture.
So no major red flags, but there's still room for a deeper dive once the full audit is done. Can't ignore the elephant in the room, though. That short seller report alleging all kinds of financial shenanigans within the Adani Group. That's a big deal, and we can't just gloss over it.
Definitely not. The report triggered a whole chain of events. Investigations by the Securities and Exchange Board of India, SEBI, and even the Supreme Court got involved.
Wow, talk about high stakes. What exactly is SEBI looking into, and how does it all connect to Adani Ports specifically?
Well, SEBI is digging into several allegations, things like non-compliance with related party transactions and how they're classifying their shareholding. It comes down to whether Adani Ports played by the rules when dealing with related entities, and whether they've been upfront about their ownership structure.
And what's Adani Ports' stance on all this?
They're sticking to their guns. saying they've always followed the rules and deny any wrongdoing.
So a lot of back and forth, no clear answers yet. This is something we'll have to keep a close eye on. What does this investigation, with all its uncertainty, mean for Adani Ports going forward?
This is a make-or-break moment for them. The outcome of these investigations could really shake things up. It could impact their reputation, their future prospects, the whole 9 yards.
It's like this dark cloud hanging over them, even with their strong financial performance.
Exactly. Investors are probably going to be hesitant until there's more clarity.
It just goes to show that sometimes it's not just about the numbers. You have to factor in all these external elements, all the complexities of the environment they operate in.
It's what makes the business world so fascinating.
Hmm.
So we've got strong revenue growth, solid profitability, but with some caveats. And of course, this big question mark hanging over everything because of the investigation. Exactly, and that's just scratching the surface. In the next part of our deep dive, we'll peel back another layer. We'll look at how Adani Ports is maneuvering through all of this with their acquisitions and divestments. Plus, we'll take a closer look at their assets. Stick around.
Welcome back to our deep dive on Adani Ports. Okay, so we've covered their overall performance, and now I want to get into the specifics, how they're actually making money and what their plans are for the future, especially with everything else going on.
Absolutely. Let's look at the breakdown of their operations. Remember those segment results we mentioned? They give us a really interesting look at how the different parts of the company are contributing.
Right, right. I mean, we know they're not just ports, but I'd love to understand the scope of those other businesses.
So they have two main segments, port and SEZ activities, and then just others. For the half year ending September 30th, the port and SEZ segment pulled in a profit before tax of 6,977 crore, and the others segment added another 72.55 crore.
Okay, so ports are definitely their bread and butter. But what exactly falls under that others category? Seems pretty broad.
It's a mix of things. Logistics, infrastructure development, some ventures outside their core port business. For example, they're involved in developing roads and rail networks. The kind of infrastructure that connects to their ports makes everything more efficient.
So they're strategically branching out, but those operations are still pretty small compared to ports.
Yeah, you could say the other segment is still finding its feet. It does show they're committed to diversifying, though. Spreading out their revenue streams and maybe mitigating some risk. It's also worth noting the difference in operating margins between the two segments.
Operating margin, right, that's key for understanding profitability. Remind me what that tells us and how Adani's two segments stack up.
Basically, the operating margin shows how much profit they make on each rupee of revenue. After you take out operating expenses like salaries, rent, utilities, all that, a higher margin usually means they're running a tighter ship, more profitable.
Got it. So higher margin, more bang for their buck.
Yeah, exactly. And here's where it gets interesting. For the half year, the port and SEZ segment had an operating margin of 61%. But the other segment, only 6% for the same period.
Wow, that's a huge difference. The port operations are a well-oiled machine.
It shows how efficient they are. They've got pricing power. They're controlling costs in a really tough industry. That kind of high margin, it might attract more competition, though, long term.
Makes sense. High profits always draw a crowd. Before we move on, gotta circle back to the short seller report. The auditors specifically mentioned a section related to those allegations. What can you tell us about that?
Right, so the auditors emphasize that Adani Ports maintains they're fully compliant with regulations. But their conclusion is not modified in respect of this matter, meaning they're not saying whether the allegations are true or false based on their limited review.
Okay, so the auditors are playing it safe for now, but the investigations are still ongoing. It's a reminder that these financial statements don't tell the whole story.
For sure, you always have to consider those external factors and how they might play out in the future.
All right, let's shift gears and talk about Adani's assets, all those valuable resources they own and control that help them generate revenue. Where do we even begin?
Well, their biggest asset category, no surprise here, is property, plant, and equipment. All that heavy-duty infrastructure you think of with ports, cranes, terminals, warehouses, all the equipment needed to move cargo efficiently.
Sounds expensive. How much are we talking about?
As of September 30th, their property, plant, and equipment was valued at a whopping 7,913.38 crore. Gives you an idea of the scale of their operations.
Wow, that's a serious investment in tangible assets. But they have other major assets too, right?
Absolutely. They have capital work in progress. That represents projects they're building that will add to their capacity, like new terminals, expansions of existing facilities. That category comes in at 600.82 crore.
So they're not just sitting on what they have, they're actively expanding. What does that tell us about their growth strategy?
It shows they're confident in the future of the industry. Long-term growth, even with the current challenges, they're making big bets on what's to come.
They're not letting the investigation hold them back, that's for sure. Speaking of investments, what about those right-of-use assets we saw in the statements?
Right, those are valued at 219.94 crore. They come from lease agreements. Basically, Adani Ports has the right to use specific assets like equipment or land, but only for a certain period. It gives them flexibility and can lower those upfront costs.
So kind of like renting instead of buying makes sense for certain assets. But they also have intangible assets, right? Those things you can't physically touch but are still super valuable.
Exactly. One notable intangible asset is goodwill. It's valued at 44.86 crore. Goodwill reflects the extra amount they paid when acquiring another company, above and beyond the fair value of its assets.
So it's like the intangible value of things like brand reputation, customer relationships. Sounds like Adani Ports has been making some strategic acquisitions.
Their acquisition strategy is a key part of their growth. By acquiring companies with established operations and customer bases, they can expand quickly and offer more services.
It's like a shortcut to growth, but it comes with its own risks, right?
Definitely. Integrating those acquisitions can be tricky, and if they overpay for goodwill, it can hurt their performance down the line.
Now let's talk about their investments category. The statements showed a pretty substantial value there, 46,370.46 crore. What are these investments, and how do they fit into their overall plan?
This category includes investments in other companies, mostly equity shares, but also other financial instruments. Unfortunately, the statements don't give us a detailed breakdown of their portfolio.
So it's a bit of a mystery box, but we can assume these investments are strategic, right? Maybe expanding into new markets or strengthening their position in existing ones.
That's a safe bet. It's common for companies like Adani Ports to invest in related businesses, companies that can support their core operations or open up new opportunities.
Interesting. So they're not just a port operator, they're an investor too, using their resources to potentially generate returns and build strategic alliances. What about their loans category?
Right. That's valued at 2,949.38 crore. These are loans that Adani Ports has given to other entities, another way for them to manage cash flow and potentially earn some returns.
So they're not just borrowing money, they're lending it out too. That's an interesting twist. What kind of entities are they lending to?
Again, the statements don't give specifics, but it's likely these loans are aligned with their business interests, maybe financing suppliers, customers, or partners, strengthening those relationships and maybe gaining an edge over competitors.
Okay, so we've got the massive investments in property, plant, and equipment, the strategic investments in other companies, and even these loans to other entities. But what about their everyday operations? They must have assets tied to that as well, right?
You're right, inventories, valued at 94.08 crore, represent goods they hold for sale or use in their operations. Things like fuel for their equipment, spare parts for maintenance, that kind of stuff.
The stuff that keeps the ports running. What about trade receivables?
That's the money Adani Ports is waiting to collect from customers for services they've already provided, basically their outstanding invoices. It's valued at 595.35 crore.
Right, and then there's cash and cash equivalents, the lifeblood of any business.
Exactly. That's the most liquid assets they have. Cash in the bank, short-term investments they can easily convert to cash. Basically, the money they can use right away for bills, investments, unexpected expenses. It's their financial safety net, valued at 79.69 crore.
So when you put all these assets together, the ports, the investments, the loans, the cash, you get a picture of a company with a really solid financial foundation.
Adani Ports is definitely a force to be reckoned with. Their assets are spread across a wide range of categories. It shows just how complex their operations are and how ambitious they are for the future.
It's a good reminder that financial statements can be a window into a company. You can see their priorities, their vision, how they operate.
But like we've been saying, it's crucial to look at the bigger picture too. Those ongoing investigations, industry trends, all of that.
Couldn't agree more. And we've only explored one side of the balance sheet. In the final part of our deep dive, we'll flip it over and look at Adani Port's liabilities, how they're financing everything and managing that mountain of debt. Welcome back to the deep dive. We've explored Adani Port's revenue, we've seen their profitability, and we've unpacked their impressive assets. Now it's time to tackle the other side of the balance sheet, liabilities. Let's dive into how they're financing their ambitious growth and managing that mountain of debt we saw.
Yeah, that's a crucial piece of the puzzle. Understanding a company's liabilities is key to figuring out their financial health and risk profile. Let's start with the big one, borrowings.
Right, borrowings, essentially all the debt they've taken on to fuel their operations and expansion. Remember that a big number from the last part? Over 42,000 crore. That's a lot of money to owe. Can you break down that debt for us?
Sure, so as of September 30, 2024, their total borrowings were 42,120 crore. That's a mix of long-term and short-term debt. Most of it, 37,849.34 crore, is long-term borrowings, meaning those debts are due in more than a year. Short-term borrowings due within a year are much smaller at 655.06 crore.
Okay, so different types of debt with different repayment timelines. Makes sense, matching the type of debt to what it's financing.
Exactly. Long-term debt is usually used for major investments, things like building new port facilities or buying other companies. Short-term debt is more for working capital needs, like handling seasonal ups and downs in inventory or receivables.
We also saw lease liabilities in the statements. How do those connect to the right of use assets we talked about before?
So lease liabilities, they were valued at 96.62 crore. They represent the present value of all the future lease payments Adani Ports has to make. It's like the other side of the coin from those right of use assets. They get to use the asset, but they also have to pay for it.
It's all about balancing those rights and obligations. All right, let's move on to trade payables. We talked about trade receivables earlier, the money they're waiting to collect. So what are trade payables?
Trade payables are the opposite. It's the money Adani Ports owes to its suppliers for goods and services they've already received. Basically, it's their outstanding bills.
So it's a constant flow, collecting from customers and paying suppliers. How much do they owe to their suppliers?
As of September 30th, their trade payables were 3,501.54 crore. Shows you how much they rely on their suppliers to keep things running.
Okay, moving on, we have this interesting category, provisions. What are provisions and why are they considered liabilities?
Provisions are estimates of liabilities for expenses that are likely to happen in the future, but they don't know the exact amount or when it'll happen. Think of it like setting aside money for a rainy day.
So it's a buffer for those just-in-case scenarios. What kind of things might these provisions cover?
It could be warranties on their services, potential legal claims, restructuring costs, that kind of thing. Adani Ports has provisions totaling 11,100.75 crore. Shows they're being cautious and planning for potential bumps in the road.
It's acknowledging that sometimes, even with the best plans, unexpected things happen.
Exactly. It's always better to be prepared.
Okay, last stop on our liabilities tour. Current tax liabilities. This is the taxes they owe based on their current profitability, right?
You got it. Their tax bill, basically.
Mhm.
As of September 30th, it was 193.44 crore.
So they're keeping up with their tax obligations, always a good sign. When we step back and look at all these liabilities, the borrowings, the lease liabilities, trade payables, provisions, tax liabilities, what does it tell us about Adani Ports' overall financial strategy?
It shows they're using a mix of financing sources to fund their operations and growth. They're not putting all their eggs in one basket, which helps spread the risk.
Right, it's like a diversified portfolio for their liabilities. But debt always has risks. How can investors tell if Adani Ports is managing its debt well?
Debt ratios, like the debt-to-equity ratio and the debt service coverage ratio, give us some clues. They help us understand how much debt they have compared to their equity, and if they can make their debt payments.
Can you refresh our memory on how those ratios work and what they say about Adani Ports?
The debt-to-equity ratio compares how much of their assets are financed by debt versus equity. Higher ratio means more debt, which can make profits bigger, but also losses. The debt service coverage ratio looks at whether they're generating enough cash flow to cover their debt payments. Higher ratio means they're in a better position to handle their debt.
So these ratios tell us how risky their debt is and if they can pay it back comfortably. What do the numbers say about Adani Ports? Are they managing their debt responsibly?
Well, based on what we see in these statements, their debt ratios seem okay. It suggests they're managing their debt responsibly. Plus, their strong revenue and valuable assets give them a bit of a cushion.
But we can't forget about those SEBI investigations and the potential impact they could have.
Absolutely. Those investigations add a layer of uncertainty that investors need to consider.
So here we are at the end of our deep dive into Adani Ports and Special Economic Zone Ltd. We've covered a lot of ground. Their revenue, profitability, assets, liabilities. We've seen their strategic decisions, their growth plans, and the challenges they face, including that ongoing investigation.
Hopefully this deep dive has given you a better understanding of this company. It's a complex and dynamic organization playing a key role in India's economy. And they're doing it all while navigating a pretty tricky landscape.
And remember that question we posed at the beginning. Now that Adani Ports is making these big moves in port acquisitions and expanding their reach, how might this shake up the global shipping and logistics industry? That's something for you to think about.
Their actions could have ripple effects throughout the industry. It's going to be interesting to see how it all unfolds.
Thanks for joining us on the deep dive. We'll see you next time for another fascinating journey into the world of business.